Hello, this is Jay King, self-made millionaire, coming to you from millionairepenny.stocks.com, and I wanted to congratulate several of my students on HMNY. I had one student that emailed me this particular stock, and several of my students actually made money on this. But one student that emailed me at in the morning, and this particular stock was at 220, and so I had time to get in, but I was very busy today. I don't really like to trade as much when I'm focusing on other different things. I did make some trades today, but I was talking with Google for a while on some things that I'm doing. They're helping me to monetize and leverage some other things I'm doing online. But I do want to congratulate several of my students that did get in on this particular play. Remember, the four things that we focus on is price action, momentum, volatility, and volume. You see the volatile spread, the day's range, the fluctuation in price is almost $9. And so this is a wonderful play, much price action, much value. I want to show you something that's really important. Companies report earnings every quarter. And sometimes you'll get a PR, which is a press release, or you may get a Seeking Alpha article, or you may see some type of wonderful article on Huffington Post that actually shows you that a company is doing some things that may add value to their company or add value to their customer base. But there's several different things that will cause a company's stock to rise. But if you look at this historical quote, you see that the company, its stock has been at $1.30, $1.40, $1.50. If you look in March and you look in February, the stock has still been in the mid-dollar range. But all of a sudden, I want to show you something. This is the power of price action and volatility and volume. Notice that the volume increases and it goes all the way up to 8 million. Friday, the volume was only at 488. Now, the volume is only dealing with the daily amount of shares that are being traded on a day-to-day basis. The market cap deals more with how many shares the company possesses as a whole. So we see that the market cap is 16.8 million, but just today alone, this is incredible. It's over half of what the market cap is. So in one day, for some reason, we haven't even researched and read about the company because today we only play price action. And you have to understand when you enter into a trade, you have to know what you're doing. Some companies we research, we look at balance sheets, we look at financials, we look at SEC filings. But a lot of times you don't have time to do that. So what we do is we play the ticker, we play the charts. And we look at the charts and we look at the numbers and we determine support and resistance levels. And we determine what entry points we need to enter into the stock and what exit points we need to exit the stock. And these are different things that you will learn more at millionairepenny.stocks.com. Many of you already know about support and resistance levels. But I believe what's even more important than that is, number one, learning to manage your risk. Anytime you go into a trade, you need to know what your risk and your reward ratio is. And when I go into a trade, I already know if that trade doesn't work out for me, I either set stop losses or I already know where I'm going to exit that trade. I want you to develop a managerial consciousness as it relates to managing your risk. It's so important to have a managing consciousness as it relates to risk when you're trading, because a lot of times people buy stock, but they don't understand how to limit or minimize their risk. Let me give you a quick example. On this particular trade, HMNY, if this trade doesn't work out for us, let's say if we get in at 130 with 400 shares. So if we get in at 130 with 400 shares, if the stock drops to 120 or 121, I'm probably going to already be out of the trade, because me personally, I'm playing the breakout. I'm looking to get into this trade. I don't even want to give up 3, 4, 5 cents on the decline. So if I get in at 130, I'm probably going to set my stop losses, whether it's a mental stop loss or whether I set it within my brokerage account. I'll probably set my stop loss at 124, 123. And so that would basically mean that if that stock goes below the price of 130 and it goes to 123, 124, then I'm selling it. And the reason why we do that, we practice that trade, we practice that discipline, is because there's so many other plays that have potential. You cannot marry or fall in love with a stock. When you're playing the breakout, the goal is to get into the trade and see the stock break out into new heights. And so let's just say if we bought this at 130, 400 shares, and it went all the way up to $8. Well, that's a 7 cent spread. We maximize our profit and we make $2,800. But notice when I manage my risk, if I don't make the $2,800, which is the upside, which is the reward ratio, if I make, watch this, if I go in at 400 shares at 130 and it drops all the way down to 120, then I only lose 40 cents. I only lose 40 cents plus the commission, which is about $50 to $60. So think of it like this. If I do several trades and I continue to practice this system, when a trade doesn't work out for me, I minimize my risk and I only keep my risk minimum to $20 to $50. So if I lose on a trade, this is the reason why you don't want to buy a whole bunch of shares, because you're going to expose yourself to more risk as you're growing an account. You want to keep your trades at 200 to 500 shares when you're buying stocks that's around 50 cents, $2, $3, $4. Now, if you're buying stocks that are 15 or $20 or $30 and you're not playing options, then of course you want to buy 100 shares, 50 shares, 150. The more that the stock costs, then you want to buy a minimum amount of shares. And so this is something really important. I want you to listen to this lesson over and over again until it resonates into your subconscious mind, because what's more important than making money is educating yourself and disciplining yourself, because that's what attracts success. I see many people that go into trading and they have the wrong psychology as it relates to trading. Now remember, there are four quadrants. There's futures, there's Forex, which is international market, there's stocks, and there's options. All four are wonderful. The area that I am an expert in is stocks, so that's what I teach. And one of the things that I'm very big on is I teach people to start off paper trading first. You need to make about 200 to 300 paper trades. That will give you a lot of experience and a lot of education. Paper trading will help you to tap into a higher version of yourself. It will conquer emotionalism. It will conquer greed. There's a lot of things that you need to conquer before you start dealing with your own money in the stock market. Once you have made 200 to 300 to 400 paper trades, then you can migrate into the system of learning how to trade live. But the first thing you want to do is start off paper trading so you can practice some of these strategies that you're going to learn through our blogs, through our video lessons. And I'm telling you, there's some wonderful opportunities out there. But if you're going to be successful in the stock market, you're going to have to trade using a psychology or trade with rules. Many people go into the market like they're gambling. You know what? When you go into the stock market, a lot of people have the wrong philosophy. They think trading is gambling, and it's really not. Because what happens in trading is if you learn how to trade with rules and with discipline, it actually becomes an education that you can train other people to do, but you also trade with a psychology that can get results. Trading, you can embrace a psychology as it relates to trading. When you're gambling, you're only functioning based off of luck. And so that's the difference in gambling, and that's the difference in trading with skill and education, because trading can be attached to skill and to education, and you can increase your chances to be successful because you're trading under the confines of using a system, and you're trading with discipline and education. So remember this. If you're trading the breakouts or earning winners, that's the same thing. An earnings winner is when a company reports earnings and the stock begins to break out into new heights. If you're doing that, start off with a small amount of shares and be patient. When you get into the trade, know what your exit points and your entry points are. If you get into a trade and you get in at $1, you should know if that trade goes down to 95 cents or 90 cents, you're going to exit that trade, because remember what we practice. We practice minimizing our risk. So if I get into a trade, I want to keep my risk minimum as possible. This is why you have to determine what your risk and your ratio reward is. Your risk will be how much you're willing to lose if the trade doesn't work out for you. And that means you have to know how many shares you're going to buy if you're going to determine your risk reward ratio. The reward is, once the stock goes in your favor, don't get too greedy. You know, some people may have bought this particular play, HMNY. They may have bought it at $1.30, $1.50, or $2 and sold it for $5. That's wonderful. Don't get upset because you didn't get to sell it at 8 or 9. You don't want to get greedy. You want to overcome greed, and you want to learn to take your profit when the market gives you a $2 to $3 upside. Because I'm going to tell you, these particular trades don't happen all the time. So when you're able to make money in the market, you have to learn to take your money. I see sometimes people have bad exit strategies, and a stock could get up $2 or $3 and they still want to hold on to it. And so the aftermarket eats up all their money. All of a sudden they hold on to it. They don't take the profit. And in the aftermarket, the stock drops $3 to $4 because there's a bad press release that comes out after the market closes, and then the company begins to decline. So it's so important to take your profit when you can. Again, this is Jay King, self-made millionaire, coming to you from millionairepenny.stocks.com. Please go and visit us at millionairepenny.stocks.com. You can click on services. We offer 3 additional services. Also, to click on our blog, which is free. We have some wonderful information we'd like to share with you. And remember, in order to attract success, the number one key is education. Remember, don't chase money. Anything that you chase, you cannot attract. But if you want to attract success, then you attract it through educating yourself. Have a great day.